Hey, I'm at the 2026 ICSC Las Vegas conference with Alanna Loeffler, Senior Managing Director of America's Retail at Cushman and Wakefield, and we'll be talking about the evolving landscape of the retail sector. Alana, thanks so much for taking the time to speak with us.
Thanks for having me here.
Of course. So, how has the retail sector changed in recent years, and how have some trends you're observing impacted owners, operators, and developers?
Yeah, we really have been through a reset from 5 years ago. We went through COVID, everybody started shopping online. There was a lot of retail space availability. Landlords were trying to figure out what to do with all of this available space. Fast forward just a few years later, we are in a complete opposite situation where landlords really have a lot of leverage. We're seeing people, as much as they have continued a lot of the shopping behavior online, we definitely have seen a lot of changes in shopping behavior. We are shopping online, we're shopping in store. It's really all about the omni-channel experience, or what we like to call unified commerce. So people's behavior has really hit a reset. They want to be back in the store again. They want to be back sharing experiences, being with their friends and family, dining out, and really taking advantage of all these great concepts and brands that have come to the retail landscape. And so here we are a few years later, and we're really seeing spaces tight again. I mean, it is really at historic lows in terms of what's available. We're seeing high demand from all these different brands. We see a lot of brands coming from overseas wanting to take advantage of the US market and all the great things that are going on here, all the great consumers that are ready to be out and about shopping again. And so they're willing to pay rents that are historically higher than they've ever been willing to pay before. And so it's just made the market incredibly tight. And so, when looking at developers, landlords, operators, they really can have their pick of these incredible brands, incredible experiences that are coming to our shopping centers and lifestyle centers.
And you were talking a bit about larger consumer habits and preferences around space. What do you think they tell us more generally about the sector, and really where it's headed long term?
I think that, right now we're dealing with re-engaged foot traffic. We're back up post pandemic. We are higher in foot traffic across lifestyle centers again. And we're really on a great trajectory in terms of incredible mixed use destinations, shopping lifestyle destinations that are activated, that are, breathing life back into communities and, different municipalities and areas. And so I think that it's a really exciting time, and we're on an upward trajectory. There's a lot going on in terms of macroeconomic trends right now to factor in. Consumer sentiment is down slightly, but shopping and spending continues to be steady. So, I think that it's definitely this year we're going to see in the short term how things play out. But in the long term, I think that we have strong fundamentals, and we're going to continue to see people spending and, more products being sold and brands just continuing to grow.
Yeah, for sure. And on the subject of brands, yesterday you moderated a discussion based on around optimizing your anchor tenants at different properties. What emerging opportunities do you see for investors and other stakeholders in this space, especially when it comes to really positioning these anchor tenants?
There's so many exciting opportunities for them right now. And like I said, they really hold a lot of leverage, and they're in a position of strength. Vacancy, I think the big box categories declined about 1% year over year. So, and that's despite some big box tenant bankruptcies that we've seen in the last year. So they really are in a position where they can curate the right experience for their consumer. And they can really take a look at what the co-tenancy looks like in their center, what the needs are of the community around it, what the demand drivers are in the area, and really curate something special and unique. And we're seeing all these really exciting experiential, concepts coming out across immersive experiences, the sports focused, concepts, and the what we like to call competitive socializing that continues to just be so popular, and combining that with elevated food and beverage. And it's so much more, I guess, desired by landlords than ever before. There was a time where that was like just starting, and it was a little unsure how that was going to go, if we're going to see that demand from shoppers and from the population. But it's something that everybody has just really embraced. It's taken off. And so I think there's a lot of really interesting experiences that they can be bringing into those spaces.
Yeah, and you mentioned sort of larger macroeconomic uncertainty. It's kind of this paradox, with how strong the retail sector is, though, in the backdrop of this, increasingly uneven economy, this K-shaped economy. Alongside that, what are some other challenges that retail stakeholders face, in the present moment and possibly emerging in the future?
We know you just mentioned the K-shaped economy, and it's very interesting because we're seeing that in both the consumer and also in the available space that's on the market. There is a flight to quality like never before, and it's very bifurcated. We're seeing Class A centers just excel and really be tremendous in terms of how they're performing. Where then you have the Class B and C properties really just sitting and really trying to figure out what they need to be for their communities and how they should be repositioned. So it's really interesting to see how drastic those two categories are.
Yeah, and we're hearing, a lot yesterday and today that redevelopment is often a more compelling strategy than just, building anew
Yeah.
from the ground. Are there any other areas of the sector that you think are underappreciated at the moment, or any other areas within the redevelopment space itself that you think developers and other investors should be taking a look at more?
Yeah, well, we talked yesterday about how we can be repurposing these Class B and Class C spaces. Anything from educational spaces, medical. We even talked about residential being great, areas to really go into, and especially as it relates to medical, educational, co-working. That really you can utilize the basic infrastructure and the bones of the retail spaces to be able to build out something pretty quickly and pretty, I guess you might say, lower capex than complete redemolish and a rebuild. So those are some areas, but we're also seeing some really interesting things happening in the warehouse and logistics fulfillment space. It's a low quantity across the board in the U.S. I think it's like around only 70 locations. But we're also just starting to see the very beginning of something that most people think is very unsexy, but I think it's so interesting right now, which is data centers, because there is just an undeniable AI explosion. It's not going anywhere. It is only growing and going to just take off into who even knows what heights. And so, we've seen some of these major institutional landlords look at their portfolios and try to understand how it pencils out. It's very difficult. There's like a steady stream of electrical current that you need that just can't be supported from a retail zone very easily, or if it can be, it's extremely expensive. So we haven't figured that out yet, but at the micro level, we've seen a few of these data centers play out. And I think as it relates to the smaller square footage, it could be really interesting to see how that evolves.
Yeah, and the sector is just really now at the center of so many other areas of CRE, like residential, like industrial, and of course now even data centers.
Yep, exactly.
Alana, thank you so much. It's been a pleasure.
Thanks. Take care.